In early 2021, a quiet revolution began in the most unlikely of places, the stock market. It wasn't a government or institution that sparked it, but a Reddit user named Keith Gill. Gill, a regular guy with a YouTube channel called Roaring Kitty, had been analyzing the GameStop stock since 2019. He believed it was undervalued. The company, known for selling physical video games, looked outdated in an increasingly digital world. But Keith dug deeper. GameStop, despite store closures, had little debt, solid cash reserves, and was poised to benefit from the launch of new gaming consoles. He posted detailed financial breakdowns on Reddit's WallStreetBets and backed it all with data, SEC filings, press releases, market trends. Most laughed at him, but a few paid attention. Then they noticed something wild. GameStop's stock was shorted at 130%, a nearly impossible figure. Hedge funds had placed huge bets that the stock would collapse. But if enough people bought the stock, those same funds would be forced to buy shares at higher prices to cover their positions, a phenomenon known as a short squeeze. Keith had discovered a weakness, and WallStreetBets was about to exploit it. To understand how this happened, we need to rewind to the year 2000. Then, President Bill Clinton signed the Commodity Futures Modernization Act, which accelerated the financialization of the U.S. economy. Wall Street moved from investing in companies to inventing increasingly complex financial products, often disconnected from the real world. This lack of regulation culminated in the 2008 crash. Hedge funds and big banks were bailed out. Regular people weren't. And the frustration boiled over in 2011 with the Occupy Wall Street protests. But that movement fizzled, divided by political and social infighting. The banks carried on. Fast forward to 2020. The pandemic devastated small businesses. 47% of American jobs were tied to them. Yet corporate giants like Amazon and Walmart thrived. The stock market surged while the average person suffered. Stimulus checks offered little relief, and frustration began to simmer once more. In 2012, a Washington, D.C.-based analyst named Jaime Rogozinski created WallStreetBets, a Reddit community focused on high-risk investing. It remained obscure until 2019, when commission-free trading platforms like Robinhood made stock trading accessible to everyone. Suddenly, the subreddit exploded in size. By 2020, the forum was massive. But it wasn't just about money, it was about beating the system. That's where Keith Gill's analysis came in. He had invested $53,000 in GameStop back in 2019. By 2020, his position started gaining traction. But it wasn't until other users realized the absurd short interest that everything took off. A user posted a now-famous guide titled Bankrupting Institutional Investors for Dummies, featuring GameStop. The community had found its mission. If they bought and held enough GameStop stock, they could trigger a short squeeze and punish the hedge funds who bet against it. Short selling works like this. You borrow stock, sell it immediately, then buy it back later at a lower price to return it, profiting off the difference. But if the stock goes up, your losses are unlimited. With GameStop, the hedge funds were so confident it would drop to zero that they shorted more shares than existed. That arrogance became their undoing. The WallStreetBets community launched an all-out buying frenzy. Keith's analysis became the rallying point. As more people bought in, the price soared. By late January 2021, GameStop became the most traded stock in America, more than Apple, Google, or Amazon. Its price rocketed from under $5 to over $490. Hedge funds like Melvin Capital were hemorrhaging billions. Reddit users weren't just investing, they were revolting. The phrase diamond hands became a symbol of resistance. The plan was simple: hold the stock and let the hedge funds burn. Billboards popped up across the U.S., urging people to buy GME online. Users coordinated efforts and encouraged each other. The movement became so massive that it caught the attention of the U.S. government. Discord banned the WallStreetBets server for hate speech. Facebook removed Robinhood trading groups. Then, Robinhood itself blocked the purchase of GME and other shorted stocks like AMC and Nokia, allowing only sales. The outrage was immediate. Robinhood, funded in part by hedge funds like Citadel, had sold user trading data worth hundreds of millions. Now, it was being accused of protecting institutional investors at the expense of the public. Even Elon Musk weighed in, grilling Robinhood's CEO in an online interview about why traders were blocked. It turned out Robinhood needed to raise $1 billion overnight to meet regulatory capital requirements due to the insane trading volume. By January 28th, hedge funds and short sellers had lost over $70 billion. Small-time investors celebrated, some paying off student loans or donating to charity. Keith Gill's position peaked at $48 million, but the chaos didn't last. As February rolled in, GameStop's price fell. Big investors like BlackRock had quietly joined the buying frenzy early and sold at the top, making over $16 billion in profit. Many Redditors held their shares too long and lost hundreds of thousands. Others tried to shift the movement to silver, but the market was too large to move. The media blamed Reddit anyway, triggering mistrust. There were even accusations of hedge funds manipulating the price back down using tactics like short ladder attacks, rapidly selling shares to themselves to trigger automated sell-offs. The SEC began investigating. NASDAQ called for surveillance of social media to prevent such movements. Meanwhile, Treasury Secretary Janet Yellen, who had earned speaking fees from Citadel, called a regulatory hearing, despite the clear conflict of interest. This was the first time in history that retail investors, using social media, took on Wall Street and won, at least temporarily. It spread globally. Shorted stocks from Amsterdam to Tokyo began surging. In the US, lawmakers now had to reckon with a market where price and value had fully diverged. For years, companies propped up their stock prices with buybacks, fueled by cheap borrowing and low interest rates. But the GameStop event pulled back the curtain. This wasn't just a trade, it was a message. A digital uprising against a financial system that seemed rigged against everyday people. Whether or not regulation clamps down on retail traders or even bans coordinated action, one thing is clear: the financial world will never be the same. And that, my friends, is the story of how a Reddit user sparked a financial rebellion. A tale that's still unfolding, and one that future generations will study as the moment Wall Street was forced to pay attention.